video podcast is about two things: commodities and cash. My name is Lynn Hinderocker, and thank you for joining me on Next Biz Success. We're talking today with a tax specialist, an expert in the rural and agricultural marketplace and tax planning for the hundreds, if not thousands, of farmers here in the Nebraska area. Welcome, Tina Barrett. You're with the Nebraska Farm Business Organization. You're in Lincoln, but you really serve many ag producers and farm operators across the entire state of Nebraska. Is that right?
That's right. We travel across the state and meet with different ag producers all over the place.
Good for you. Thanks for joining me on Next Biz Success.
Thank you.
You bet. Let's talk for a second let's establish context about how many farm operations are there in the state of Nebraska?
There's actually over 47,000 farm operations in the state. And that's going to range from a small hobby farm to a large commercial operation. So.
Okay, good. And obviously you're a tax-oriented organization. It's a huge responsibility. Comes around not just once a year, really, but for a good operator, it's an issue almost all the time.
Exactly. Yep.
Exactly.
And there's some people that we're doing, even tax planning for next year already, let alone this year.
You're proactive.
Exactly. We're looking far in advance.
Good for you. What's the range of taxable income we're talking about here if you run a farm? I mean, what's the tax load or the tax burden that? Of course, you got to have your income first. So, what's the average net income?
Well, an average net income. Last year we look at things on an accrual basis, which is what the farm actually earned.
Okay.
And that was about $203,000 last year, which is considerably higher than what it normally runs.
It seems like a big number.
It does, yeah. And we had high commodity prices the last 2 years that really played into some really great income. It's not normal. And that causes us to have some abnormal cash incomes when we look at things on a tax basis.
Okay. So pretty much the incomes go up and down with the price of commodity prices, or is that not necessary? Is that a generalization?
Oh, sure. That's going to come into play. But you also have input costs that fluctuate just as high. Your seed and fertilizer prices go up and down every year too.
Right.
And so we've got an income function as well as an expense function that we're dealing with. And farm income is just notorious for ups and downs and highs and lows and never consistent.
So thus the importance of tax planning.
Exactly.
Let's pretend that we are that person that made about $210,000 in taxable income last year. When they sit down with you, maybe for the first time or something, what are their chief concerns? What are the issues that they are typically struggling with?
Yeah. Well, usually as a farm operator, the last thing you want to do is pay any taxes.
Yes.
So now, any taxes. We don't want to pay any. And now that's not necessarily a good thing. Paying taxes means you're making money, and it's hard to avoid totally paying taxes.
Right.
But there are certainly things that we can do that can help minimize the tax burden over the life of the operation.
Okay.
And that's going to vary depending on whether or not we have an operation that's consistently making about $200,000 a year, or one that's been making 50 and all of a sudden made 200,000.
Well, let's take the latter circumstance. Let's say pretend we only made 50 last year, and we made 200 or 2 years ago and 200 recently.
Right.
How are you going to approach that?
Well, that one provides us some opportunities to use income averaging, which is a tax law that allows us to take a high income year and carry that income back into some previous low income years. And so we're going to be able to use some of the stuff that we didn't use in the past and maybe maximize our ability to get that at a really cheap rate. And so it works really good for that. It's not going to work for that operation that's consistently making that money.
All right, well, tell me a little bit, what's the strategy there? We're making about 200 grand a year in and year out. How do you work and protect that person from excess taxation?
When once your profitability reaches that level and stays there, it's hard to totally bring your income way down. Yeah. There's things that we can do with prepaying fertilizer, prepaying our inputs,
right.
Because on a cash basis, we take the deduction when you pay it. So we might double up on some input costs. We might be looking at capital purchases of a tractor, a combine that we can use the accelerated depreciation allowance on and bring our income down. Use some of those kinds of techniques pretty regularly year in and year out.
Okay, good. Now, these sound like really solid strategies. What's the hang up in terms of implementing them? When you get back to them 3 months later or 6 months later, does it typically just flow smoothly, or what kinds of things get in the way of the deployment of these strategies?
Well, there's always, management sides. I think there's always a management decision that needs to be made as well as a tax decision, and they're not always the same. What's the smartest decision for your business and what's the smartest tax decision?
You mean they can be at odds with each other?
They can be, right. Maybe our smartest tax decision is to bring in some more income and sell at harvest time. But from a management standpoint, that's historically when we have the lowest prices. And there's a history of a carry in the market where they're paying you to wait till March to sell.
Right.
So those kinds of issues might conflict. You also, if you get into a situation where 1 year you have high income and you prepay your seed for next year,
Yeah.
it's a deduction now, but now you're short a deduction for the following year. And so, we could end up with a bigger problem next year by pulling some of those deductions ahead.
I can certainly
And
see how
so-
there'd be some trade-offs.
So there's some trade-offs, and you got to think about how, if it's that one-time high year income,
Yeah.
maybe those prepayment options and some of that, capital purchases, can really work for you. Where if you're at a profitability level where it's consistent, we're just creating ourselves, again, a bigger problem the next year.
Okay. Is now a good time for a wealthy and successful rural entrepreneur to invest in capital equipment and buy some new tractors and stuff like that? Is now a good time to do that?
There's been a lot of investment in the last 2 years where profitability had gone up because of the commodity prices.
Okay.
And so there's been a lot of investment. And there's always a trade-off in making sure that you're at a healthy enough financial position to do that.
Yeah.
Maybe invest in some of the new technologies, the GPS and some of the auto steer and some of those extra features from a tractor might not be a bad decision.
Do they tend to pay off then in terms of extra productivity or efficiency?
Well, yeah, you definitely get the extra productivity. You extra get, they talk about, easiness on the operator and less stress, those kinds of things. You just got to weigh that with the tax savings and whether the cost is worth it for the business. So.
Sure. When you sit down and talk to these kinds of folks, is their perspective on the future positive, Tina, or is it tenuous like everybody else in the economy?
Yeah.
Are they exceptions to the rule, or are they feeling really good right now because things have been good lately?
Yeah, I think farmers by nature are optimistic. It's hard to spend.
You got to deal with the weather every
exactly.
day,
It's hard to spend as much money as they do to put a crop in the ground that the weather could destroy,
Right.
or there's so many things out of their hands. It's a little different than a Main Street business where
Yes.
you get so much of this. You put all your investment, and then it takes a year to get something for it. So I think by nature, farmers are optimistic people.
They are.
But good years like this certainly put a better spin on things, a better position on your financials. Getting the debt paid down.
Sure.
And some of those kinds of things.
Paying
So it's
debt
always
down
a good
sounds
thing.
sounds like a good strategy. too.
Exactly, yeah.
Absolutely. Well, Tina Barrett with the Nebraska Farm Business Organization, you work with rural producers all over the state of Nebraska.
That's right,
And
yep.
this has been a really substantive interview. Thank you so very much for joining me on Next Biz Success.
Thank you.
You bet. You can make it. You need tax planning. If you're doing well on the farm, though, you got to get out ahead, and you probably have more choices than you actually realize. People like Tina Barrett can help you out. Thanks for joining us. My name is Lynn Hinderrocker, and keep on going, keep on growing.